Why are UK prices still rising? Why is everything still so expensive if inflation is falling? Before we dive into the deep end, let's look at the absolute latest numbers straight from the news desk. In the year to January, UK prices rose by 3%, slightly down from the 4% we saw in December. This means inflation is still stubbornly sitting above the Bank of England's golden 2% target. To wrestle it back down, the bank has been busy moving interest rates, delivering 6 cuts since August 2024 to bring the current rate down to 3. Baffenjitshishawu. Even the way they measure inflation has just been given a 2025 makeover. The famous basket of goods has just been updated to include virtual reality headsets and yoga mats. Whilst waving goodbye to local newspaper adverts, inflation has massively dropped from that terrifying 40-year peak of 1% back in October 2022. So, the big question is, if the numbers are getting better, why does popping out for a quick shop still feel like you need to take out a second mortgage? Your wages are staying perfectly still, yet the price of a loaf of bread, your energy bills, and a cheeky pint at the local pub just keep creeping up. You switch on the telly, and the newsreaders are all smiling, telling us, great news, inflation is falling, sounds brilliant, doesn't it? But hold on, if inflation is supposedly dropping, why on earth is your grocery receipt still so painfully high? Today, based on a brilliant breakdown by BBC News, we are going to expose the biggest illusion in economics. We'll find out what inflation actually is, and why your weekly shop is refusing to get any cheaper. Let's get into it. Part 2. What is inflation and the ONS basket? First things first. What exactly is inflation? In plain English, inflation is simply the speed at which the prices of everyday things go up over time. To measure this, the clever folks at the Office for National Statistics (ONS) don't just track the price of Freddos. To measure this, they use that massive, imaginary basket of goods and services we mentioned earlier. This basket tracks hundreds of everyday items, reflecting exactly how we shop today, which is why they just binned local newspaper adverts and added VR headsets and yoga gear. They track the price of this exact basket month after month. For example, if a bottle of milk cost you exactly £1 last year, but today it is £1. Linwoo. Well, think of it like driving down the M25. Imagine you're doing 100 miles per hour, prices are rising incredibly fast. Now, you ease off the accelerator and drop down to 30 miles per hour. That's your inflation rate falling. Here's the catch, you are still moving forward. Your car hasn't gone backwards. The prices are still more expensive than they were a year ago. For things to actually get cheaper, we'd need something called deflation, where the inflation rate drops below zero. But trust me, as much as we'd love cheaper biscuits, prolonged deflation usually leads to a massive recession, businesses going bust, and huge job losses. Not exactly a win. Part 4. How do we fight it? The interest rate game. So, well, I hate to break it to you, mate, but your annual milk inflation is at 5%. Your money has officially lost 5% of its purchasing power. Part 3. The falling inflation illusion. Now, here is the absolute crux of the issue. Why does the news say inflation is falling to 3%, but your food is still ridiculously expensive? This is the biggest misconception out there. Falling inflation does not mean falling prices. It just means prices are still going up, but they are going up slower than before. Think of it like, so who is responsible for keeping this inflation monster on track? In the UK, that job falls to the Bank of England, and their absolute biggest, heaviest weapon is moving interest rates up and down. When inflation got completely out of control, the Bank of England raised interest rates aggressively. Now that things are cooling down, as we saw with those 6 recent cuts, bringing rates to 3, Baifunjatishu. They are trying to ease the pressure. But how does this actually help the price of milk? It's all about borrowing money for a mortgage. A car loan or putting things on a credit card becomes incredibly expensive. On the flip side, leaving your money in a savings account suddenly gives you a better return. The result, we all stop splashing the cash and start saving instead, because people are buying less. Shops and businesses are forced to stop raising prices or even drop them just to attract customers. Supply overtakes demand. And boom, the inflation rate is dragged down towards that sweet 2% target, but it's a bitter pill to swallow. The tragic side effect is that millions of homeowners on variable mortgages suddenly face hundreds of pounds extra in monthly repayments. It's a brutal balancing act. E. Inflation equals the speed prices rise. R. Falling inflation equals prices still rising, just slower. San. Interest rates equals the brake pedal for the economy. To sum it all up, the uncomfortable truth from the BBC data is that prices are probably never going back to those glorious pre-2022 levels. What the Bank of England is trying to do is stop them from skyrocketing further, giving our wages a fighting chance to eventually catch up. So, next time your family moans about the price of the weekly shop, you can hit them with the actual economics. If this video helped clear up the confusion, do me a massive favor and smash that like button. Don't forget to subscribe and hit the bell icon so you never miss another breakdown of how the world of money actually works. Before you go, I want to hear from you. What is the most outrageously priced item you've spotted in the shops lately? Let me know in the comments below. Thanks for watching. Stay savvy, and I'll see you in the next one. Cheers.
So sad reality, the Scott Ryan but keep going. How you manage your podcast? Tell me in the comment. Thank you for watching. See you again.